get rid of this one here because that's tested, right? So let's rewind this. No, okay, we're just going to go like this. It hits that level. So let's go forward one candle here. Hits that level. So that's the level you're expecting to hit. And then you have the range it can exist in, which would have been here in that moment. So you have kind of, this is your total cap on the move, right? This is the expected, this is your cap of the move, right? Like you're in a 4-hour trade. Just like when you're in the daily trade, you have a 20% cap. Just like when you're in the 12-hour trade, you have like a 10 to 6% cap. And now this always changes based on the move. It's not always going to be 20%. Sometimes it could be 40, sometimes it could be 10, right? It's going to change based on where the cap is. So this is almost like a dynamic scale that affects everything below and under it. As you squeeze the profits down, think of it like an accordion. The bigger the two ends are, the wider spread the accordion is out, the more room it has to breathe in the inner fins, like the fins on an accordion, the more room it has to breathe in those fins. So therefore, everything in between it has more space to move left and right or up and down. It's the same kind of concept, right? Like an accordion. As it spreads out, everything inside of it gets larger or smaller, compresses or decompresses or expands and compresses, right? Or contracts. So you have a 4-hour cap here when you're inside of this move. I'm sure you have other factors that will tell you, hey, this trade is not working out. You should probably get out, right? Like this. For example, an interior trend. You hit this level here, and that's why it hits actually. So you'd have your next interior trend. From here to here. If this breaks, pretty good trigger point to get out of this trade, right? And as this breaks, pretty good trigger point to get out of this trade. Now, simply hit backside right here. And that's fair. It's still part of a move where it can hit a backside and it can bounce up. But your cap of the move didn't change. You see, that's what's great about this is because your cap of the move still existed from this point to this point. So your maximum profits here should simply be 4.5%. You have other information on your chart, such as trends, such as backsides, other exit points, other targets. If you have a cap of a move, it doesn't mean it's always going to hit the cap, right? Equally, you just have the trend break, which I'm sure just creates a new trend right here, right? Interior piece of the move, right? Which gives you your polarization because it is that untested level. And I'm sure there's a smaller level in here that once this breaks, polarization is done and the move actually goes up through this, right? So I'm sure once this happens, the move is gone, right? Because again, then that's your capped range, right? Like this is kind of the same thing as an untested level to a capped range, which would live inside of here, which again is your Pandora's box, but it gives you a direct response to what your profits should be total in this trade. And as you get more polarized in a move, the more they dwindle because the deeper in a Pandora's box you're going from one side to the other. You can just kind of delete all of this, go to a different point on the chart. Let's just fast forward it a bit here. Do something like this. Yeah, sure. That looks good. Now, if you were to not start from the highest time frame down, let's ignore the daily, let's ignore the 12, let's ignore the 4. Let's justifiably say we're on a 1-hour time frame. We're going to stay on the same time frame we are. Justifiably on a 1-hour time frame. Where's the cap? Okay, you've got this to this. So if you entered short here, your cap of the move is here. Simple as that. Justifiably on the 1 hour, yeah, you have 1.7% you can make here. Now, this doesn't mean you didn't miss something much larger, right? This doesn't mean you didn't miss something much bigger, like a range from the past, right? This doesn't mean that you didn't miss this as to where 1% is justifiable here on this time frame. 6% to 7% is justifiable here, which does a lot more than 7%. But then you just get back into that same regimen that, hey, is this actually that level, or are we in a daily range, or are we in a weekly range, right? It's why we work from the top time frames down. And justifiably on the hour, sure, just like this was. So if you were to say, here's the Pandora's box from here, the level here, you would have had a relatively justifiable 1 hour trade decision, right? So you would have had short here, right? Go to this point here, make 3%. But again, it's why we work from exterior to interior, because then you miss these larger pieces, right? Then you miss these larger events that are occurring. If you go to the 4 hour, okay, we have a 4 hour cap range right here, right? Bottom of the move on the 4, or to this here is the kind of the most somber level, to the greediest down here, right? It's the same thing, right? You have a capped range starts to expand the amount of profits that are inside of this trade. All of a sudden we have 5%, or possibly 11%, or what was really 20% on this move. But it's justifiable on the 4 hours. So it releases the cap of what you can expect on the move, right? Now, if we do this and we take this replayer tool off and we were in this right here, and we start working on the opposite side, what happens? Okay, we're going to just go to a 5-minute chart here, and we're just going to start here and say, okay, this looks like a good point to start. Here's the range. Was the trade justifiable? Yep. What's the profits? Come on, magnet tool. Okay, this one's not going to work so well. We're just going to pick a point here. 1%. We're just going to call it 1%. It's somewhere between 1.17 and 0.96. 1%. Very good. Justifiable on a 5-minute? Sure. How much did you miss on this trade? Yeah, you could have made 2.5%. I'm sure this is justifiable on a different time frame for a different reason, right? I'm sure you missed the cap of a different trade. I'm sure that you didn't see the larger event happening, not realizing you're about to take a 20% move down. But yeah, 1% justifiably on a 5-minute is decent. It's good. 1 to 1.5%. That's good, right? But again, justifiably, your cap on that trade, if you're making a decision based on that time frame, those trade percentages will be smaller and execute faster, just by the origin nature of how they're developed. They will execute faster, right? Look at how long this takes. May 7th, that we'll just call it 20 to 21:40. So 100 minutes. So an hour and 40 minutes, and you made 1 point something percent. Is it justifiable on a longer time frame? Sure. Instead of an hour 40, it's what time stamp is this? 1900 to the next day. That's what are we? May 7th at 1900 to May 8th, 23. So instead of 1%, you made 4%, but it took you, what is that, 30 hours? It took you 30 hours to make it, but it's justifiable on the 4. Had you waited a little longer and understood the cap a little better, justifiably, yes, this does take longer. Now you're in the realm of 3 days, top of a move to the bottom, the complete part of the range, and just as justifiable on a larger time frame, so are the profits, right? So if you get into something where you are like this and saying, okay, let's justify a 1-minute trade, right? Okay, let's say if a 1-minute trade can make 1%, that's justifiable. Here's the greedy point. I really shouldn't expect more than 1.5% off this. I think 1.5% on a 1-minute candle is pretty darn good. So actually, if that's the case, then we should just target the greediest point of this range, and nothing else can exist outside of this. This is the trade. It's a one. We're going to turn this magnet tool off because it sucks today. We enter here. This is the short. That's the piece of the range. Wow, 2.5%. 1, 2, 3, 4, 5, 6 minutes. This is incredible. This is a picture perfect trade because you have the range identified. You understand the cap is 2.5. So then you would even just say, okay, my cap is 2.5, but I want to target this, and I want to front run it a little bit. I want to target this because I understand that, okay, 2.5 is my cap, so I want to make around 2. Maybe I want to, 2% sounds good, like 2.05%. So I can target this, and how much is that? Oh, it's actually perfect, 2.05. Yeah, okay, that's like the perfect trade, right? But it's justifiable on that time frame given the cap of the trade. So that should just be the entire trade, because it's not justifiable on any other time frame. If it was, then we would see it by working exterior to interior, just like the next trade that exists from this greediest point here, right? This greediest point here that gets hit. You could say the same thing relative to this piece of the range, which is actually already tested first, so it comes up, test that. Yeah, fine. Here's the cap of the range. You could reasonably say this is the cap of the range, because you know what, the time frames are pretty quick. So I don't think you need to be this greedy when you're saying here's the cap, or sorry, this safe, I should say. Here's the cap. It's 0.9%. I think you can relatively go to right here 0.128, but if you could take 0.9. That's fine. Either one executes perfectly fine. But it's the cap. It's just where your trade should exist, because it's only justifiable on that time frame. It's not justifiable on any other time frame. So whether it's this level here, this level here, they both execute. They're both profits. One is 9%, 0.9, which is 90%. One is 1.28, which is 128% on leverage, right? But justifiably, it exists on that time frame for that reason. If you move forward into this and just pick another randomized spot, like let's just say right here, right? So if that is the case, let's delete these ones. We don't need that. We don't need this one. If you were to take this trade as a short right here, you could back target this part of the range, right? You could back target this, because that's where it can exist, right? That's kind of the start of the range, the greediest level, range to range, right? So you can justifiably say, yeah, the cap on this range is 0.5. Is it even worth taking? Yeah, I suppose that's worth taking. It's profits. You're grinding at that point. 0.66. Yeah, it's 50%. But that's the range. That's where the trade should exist. It shouldn't exist beyond this because that's the range unless it can be justified on a bigger time frame. Can this? No. This one can't because the short is here. Your range exists down here. Can this be justified here? Well, this one can. That's invalidated. So not really. Just like this here before we move forward in the chart. This here would be justifiable to something like this to here. And I would actually like to see a bigger time frame. So this is the problem I'm running into right now by doing this the wrong way is I'm working from the wrong side of the chart. So I'm already in a guessing game. I'm already looking at this and saying, well, here's the range. And I can already see the right side of my screen saying, oh, that's broken. But I guess theoretically, this should be my trade. So I can measure the cap and I can say, is this 2%? If so, this is a good trade. Yeah, 1%. Like that's the cap of this trade. Yikes. That's kind of okay. So not really good information. If I take my replayer tool and and I actually do this the right way. So this is the problem we run into doing it, interior to exterior, right? And then I go like this and I say, shoot, what's justifiable here? I don't really know, right? Maybe this is justifiable from there to here? Question mark. Okay, fine, that's justifiable. What's this? 2.4. That's a little better. What happens if I go up even more? I've got actually this is the range right here, so it's actually less on a higher time frame and even higher. I'm in no man's land, right? So that's why we don't work that way. And if we were actually to just speed this thing up, yeah, okay, fine, it hits target, but we worked the wrong way, so we couldn't see that when we were on this 5-minute chart. All we could see was this piece of the cap. So all we could see is this, right? All this is all we could see. All we could see is a measurement of profits from here to here, that 1% or whatever, 0.8 or whatever it was. We can call, I think it was 1%. I think we had a different point. We measured it as 1%. In reality, it actually hit our target of 3.5%, but we can't create that cap on that 5-minute time frame. So we would have missed the trade completely just because we don't understand how range capping works range capping is what you can call it. And then even there, there's levels inside of here. So I'm even starting to wonder, did we miss a bigger piece of this range, right? So I'm even starting to wonder, where does the bigger piece of this range exist, right? Where is it? Well, it's not developed yet, right? So there's some type of level in here, right? The range would have been now from back here, right? So your range would have been like, I'm not sure where the level is. Maybe we'll just call this the hourly. Oh no, it's right here. Never mind, it's on my screen. Oh, okay, this is the hourly. Let's go back into this trade and we can say, okay, where's the levels in here? Yeah, okay, obviously something was tested inside of here, so we can even go further into this thing. Is this tested? No. Is there anything else that we missed? That kind of is tested. So this is the level which is tested, which is right here, which is tested. So that means you're breaking down back to this hold level, right? So you're kind of at this hold level here. This is tested, which steps you to here. Which steps you to here, which is tested, which is bringing you to here, which is tested, which this piece of the range is polarized. So if this is lost, this 8,600 level, you can kind of expect a pullback here, right? Like you can kind of expect a pullback if this range is lost. So when we go back to this hourly chart, you're going to be somewhere down in that smaller piece again, right? Like let's actually go back to that time frame here, right? So let's see what happens. Maybe not on a 3-minute candle. That might take a little too long. Aha, levels tested pretty perfectly. Possibly front ran a little bit, but it's tested almost picture perfectly. Get this thing right here. So there's a kind of, I think this is a 3-minute right here. Let's take the replayer tool back. Was this a 3-minute? There's a 3-minute. And this I wouldn't use because it's tested, but it looks like that's the level it hit. But that's fine. I mean, it's one of the two levels is going to be tested. That's not what's in question here. What's in question is the range actually. Yeah, so it does. It goes after that 1 hour. But again, this is justifiable from the larger time frame as the cap from, go back to this piece of the move. Where does the cap exist, right? Now, there's not really a 4-hour cap. If there was, it would be right here. So we can delete all these other levels. So once this level is hit, where does the cap exist? Where can you dictate profits? Yeah, there's not really, like, this is polarization right here. There's not really any levels here that aren't tested. So this to this to this. So this is justifiable in the range, right? So this is the trade that should exist. Like, this is this to me, this is the cap of the trade, 6%. So now your levels exist below this. So now your levels exist. Okay, this is the backside tested there. You have this. You could relatively take a safe exit here, and now you have two caps on your trade. So you can say, okay, which also kind of goes into backside front side range testing twice, blah blah blah. So now you can say, okay, 4.5 as a kind of somber trade, and I could actually try to hold out for close to 6% here. It just hits its target rate to the T, 6%. Now again, what piece of this you take, up to you, right? Because it's the same thing. You have a range test and you have what's inside of the cap, right? The cap is the maximum amount. So that's what you have to understand, is that when you can justify the cap, you justify where it can exist. So the top of it and the bottom of it, which shows you I can make percentage X, which means that if I've made percentage X, my trade must be complete. So if my cap on this trade was 6% from this point, from magnet tool, from this point to this point, if my cap is 6%, if I'm in this trade looking for 6.5%, I'm out of my mind. I'm going to lose money after, I'm not going to lose money, but I'm going to lose the profits. I'm going to miss my targets because the cap isn't no longer justifiable, right? But it's justifiable from the higher time frames down as you go into a move. Just like if you're on a 1%, a 1 minute chart, you can expect kind of like 1% is pretty good for justifiable 1 minute move. If you are in a trade where the cap is 5.92 and you're saying, I want to take 6.5, guess who's not making money? That's you, because you're not seeing the cap of the move, right? It's kind of like where the range can exist inside of the trade. So that's how you have to look at trading, and when you're trying to justify targets and exits, right? Like we have these other things we'll talk about in the future, such as trigger points, uncapped ranges, these other things that give us more information. But for now, like you have to understand where the cap of any given trade exists in order to see where the profits lie, right? Again, if 5.9 is a cap and you're waiting for 6.5, like I said, you're not making money, or you have to settle for 3% when you could have had 6, right? So caps are a great way for us to see targets. Caps are a great way for us to see the maximum range of a trade, right? Like what can exist and what's justifiable. Again, going back to the time frame that we are on, if we're on a 1 minute chart and taking 1 minute levels without understanding the cap of the move, then create a 1 minute cap and take a 1 minute move. So a scenario where this might make a lot of sense is if you're trading for an hour at a time. If you have, for some reason, your schedule is really fragmented and you have 1 hour to trade, 1 hour break, 1 hour to trade, 1 hour lunch, 1 more hour to trade, 1 hour nap, 1 hour to trade, pick up my kids for an hour, 1 more hour to trade. So you're kind of in these segmented 1 hour, 1 hour, 1 hour, 1 hour routines. Your caps exist in the 1 minute chart. So you have to understand that, hey, my cap can only exist on the time frame that allows me to trade. Therefore, my profits have to exist within that cap. So again, an example of that, we can just take a random spot on the chart. Right here looks good. And we can go back to here and just pick this top to this low. Fine, something in there. And we can say, here's the cap of here's the top of the move, and here's the cap of the trade. So if I'm going to take a trade, I should, and there's even caps before that. So from this to this. So then I can say, okay, well, my cap on this trade is, no, magnet tool is the wrong one. My cap on this trade is 0.86%. So once I make that, I should be happy. And then you have a pretty relatively smooth trade because you're just operating within your cap based on your own time parameters. And then you can just say, okay, that trade was executed. Let's go to the next cap of the trade. Right here. Oh, that didn't execute because of back here. So now I can go something like this. I missed that trade, but maybe I can get into this one. And the cap of that trade would be this level here because it's kind of holding this, which means it has to hold that now. So then I'm getting into a Pandora's box where it was 0.86. I'm sure it's even going to be less. So that's telling me that it's getting more polarized against trends. So now you're at 0.5, and then you can relatively go to the next one. So if you make 0.5 there, you hit the top and the bottom. So then you can go to this one here, that moment. Let's hit here, and whatever part of these trades, and eventually you'd be here taking this trade against this level. but that already broke and it touches here. So if that's true, then here's the top cap. The bottom cap already, what did it test? It back tested this, which means it's here, tested, tested, tested. And we're on 1 minute charts. Keep that in mind. We're probably going to miss some of the larger information and miss the move, but my trade relatively exists right here, right? So let's just hit play. Perfect. Trade's done. 1 minute cap, 1 minute results, easy trade. That's it. We don't need to be doing anything else. Whether it goes up or down, we can't justify it. We can't sit here and say, where's the 15-minute level? Okay, it's from here to, you could even use this as a target in this scenario, or you could have used this as a target. Actually, that's hit. That actually goes to that perfectly. So you could just justifiably use this next. Yeah, there you go. Trade's done. Next, you could use this, right, against this if you had the time frame. But this is the cap that it can exist on in a 15-minute chart, right? Like your tested levels are already all there. So this is the cap that it can exist on. Okay, there's the first piece of the trade. There's a second piece. Look at that. Boom, boom, perfect, perfect. Bang, bang. The cap tells you where the targets are. So now you have justifiably, it should be more than, you would expect like maybe 2.53% out of something like this. Oh, perfect, bang on. Exactly what I would expect. 2.4%. And I make 2.4% justifiably on a 2.4% chart, right? On that time frame, the cap of the time frame here on the hourly, you'd say, okay, well, here's the hourly move, right? So if you were to actually say, here's the hourly justification, if you were to go to here, you could short that, and it goes right to your target. Perfect. Like it's like the justification of the chart will show you the cap, right? So your cap shows you your range and vice versa. So when you have a small time frame, if you're working interior in charts, create an interior cap. If you're working exterior on charts, create an exterior cap with moves inside of that, right? So you're, again, just to finalize the driving point here is that the cap is the total percentage you can make in a trade based on any given time frame. So the cap gives you your range. Well, it doesn't give you your level range, it gives you your profit range. Let's be very clear on that. It's not a level range. We talked about ranges. That's not what I mean when I say it gives you your range. It gives you your range of total profits that could be made on the chart. And it also gives you your time frame of where that expectation lies. If you're on 1 minute charts, then there's 1 minute expectations. If you're on 15-minute charts, there's a larger time expectation. You see? So if you're justifying it on larger time frames, realize your cap is bigger. It's going to take longer to get there. So you could maybe do something like this. Justify it on an hourly, right? So you could say something like this. Oh, okay, I can justify this on the hourly. Just put the magnet tool back on and say, here's the hourly range. Okay. Is there something even better in that? There's a 15-minute range. Okay, so this is starting to get into the top and bottom of a move. So now I can say, okay, where's the greediest parts of these moves? So here's my 1 hour level, right? This is the range. So this level does exist. This is the whole level, and it is there. It is present. Is the 4 hour? No, the 4 hour is not present. So we can work within a 1 hour cap because here's the level and there's the range inside the level. So my range could possibly be from here to here because it is a larger time frame. I can't justify this on a 1 minute chart. So I could say, okay, if we go down to this point here, this is testing a level. So maybe there's something inside of here that was untested, which there wasn't. This is actually the next two untested levels, but it's justifiable on the time frame. So I can use a larger range from this whole level to that piece of the chart. Now we can find the deeper range, the greediest level inside of that range, which is not the cap range. The cap range is this. Cap range would be this greediest level, right? Oh, come on. The cap range would be like this, right? You have two untested levels there. There's your cap range. That's the top and the bottom of the move. Okay, so that's the range, in which is close to 7%. We can round this up and say 7%. We'll just say 6.5%. We'll call it 6.5% because it's not, because I think I mismarked. Well, let's do that one more time. That's a little low. Trying to line it up here. There to here. So we can call it 6.5%. So there's roughly 6.5% in this move justifiable on this time frame, which gives you your profit cap. So this is the cap of the trade, right? Then you have the level range and the cap range. Total, we can make 6.5 is our total profits we can make. We can't go over that. If we're expecting 7%, we're stupid. Like it's just not, it's not possible. It exists outside of the range of what's possible in terms of your profit cap, right? So you can't make that in this trade. But what you could make is 6.5%. from greediest level to greediest level inside of the level range, right? And then it just does exactly that, right? It does exactly that from range to range, which would just give you your next kind of cap point, right? Like, the trade caps here or here, back here, possibly back here, backside, front side on a smaller time frame. But the cap is right here, right? Justifiable on this time frame. The cap is right here, which is actually perfect. That cap actually gets hit perfectly inside of that part of the trade. It's actually hit right to the T. And then it does actually go after that greedier level there. And then so forth as this thing plays out, right? So forth and so forth as it's going on in this move, right? So you can see how the cap will give you the range of that move. It gives you the exact profits that you can make as long as you can justify it on that time frame, and you could give it that time frame cap.